In this video, we're going to dive into the Fed minutes. They're giving us all the key hints and details on what's going to happen next as far as cutting rates, and that's going to help us make money in the next bull market, whether you're in stocks or crypto, real estate. So let's dive right in. All right, so the first thing we got to discuss is there's two camps out there. There's the Fed, Jerome Powell. They're saying they're not going to cut rates before the end of this year. We're going to look at the Fed minutes. They give us some kind of hint on what they're going to do. So that's the Fed speaking. On the other hand, the market thinks there will be rate cuts before the end of this year. So let's dive right in. So the first thing we're going to look at to give us some kind of idea on what's going to happen, just so we can prepare ourselves to make the most amount of money over the next 12 to 24 months. Okay. So the first thing we're going to do, we're going to look at the Fed minutes. There's a couple of things that I've highlighted that I want us to take a look at. So the first thing I've highlighted here, regarding the outlook for monetary policy, market-based measures of policy expectations suggested that the Fed funds rate would reach a peak in May 2023. That's clearly an indication that the peak rates are going to be in May 2023. So that means one more rate hike coming up in the next few weeks at the next Fed meeting on May 3rd. So we're a few weeks away from that, and they're hinting in their own words that's going to be the peak. So let's keep going. However, the median of respondents' modal expectations of the Fed funds rate from the desk surveys did not show any declines in the target rate through the end of 2023. So they're saying they're not going to cut rates before the end of 2023. Okay, understood. This is on pace with what Jerome Powell and the Fed has been saying. We're not cutting rates before the end of this year. And it looks like what we're looking at is the next meeting, we're going to have the last rate hike of 0.25%. Moving forward, as far as forward projections, they're projecting that in 2024 and 2025, both the core PCE and price inflation were expected to be near 2%. So they're aiming by next year and 2025, everything's going to be under control. Okay. The next thing, given their assessment of the potential economic efforts of the recent banking sector development, the staff's projection at the time of the March meeting included a mild recession starting later this year with a recovery over the subsequent 2 years. Okay, so they're predicting a mild recession at the end of this year with a 2-year recovery period. That matches up perfectly with what they're saying they're going to do with rates. So they're going to raise it one more time in May, 0.25%. Then they're going to pause. So from June to the end of the year, they're going to pause the rate hikes. They're expecting a mild recession. Once the recession hits, what's the Fed going to do? They eventually got to pivot. So the pivot will likely come next year in 2024. And we're going to take a look at the chances of that right now in a second. But that's something we got to keep an eye on, because we got to see what stocks, crypto, Bitcoin are going to do once there's rate cuts, because that's where we're going to make our money. So if we take a look at the Atlanta Fed projections on rate hikes and rate cuts. So we're going to look at 3 dates here, guys. So please follow along so we can take a look at this. The first thing we're going to look at is the expectation in September of 2023, later this year, the chances of a rate cut, which is the blue line we're looking at, is 41%. The chances of a rate hike, also 41%. 41% is not a low number. It's not out of the question that we could see a rate cut by September of this year. So there's the same likelihood that there's going to be a rate hike. I highly doubt it that there's going to be a rate hike, but it looks like there's a chance we might have a rate cut. So let's move forward 1 quarter to December of this year. In December, a little bit different story. It looks like there's a 60% chance of a rate cut by December and a 30% chance of a rate hike. pretty solid chance that we're going to get a rate cut. And this is directly from the Atlanta Fed's website. The 60% chance we're going to get a rate cut by the end of this year, 60%. If we look at March 2024, now we're up to 72%. So very, very likely by Christmas of this year, we're going to have a nice Christmas present. We're going to get a rate cut, or very early next year, we're going to get that rate cut at some point later this year, early next year. Now, again, that's super important, because what's going to happen after the rate cuts is stocks and crypto. What are they going to do? Are stocks and crypto going to shoot up, or are they going to consolidate, or are they going to go down before they go up? That's what we're going to look at next. So if we look at what happens to stocks after rate cuts, we're going to see that actually stocks go down in the short term after rate cuts. So if we look at this chart, the red dots are rate cuts. So as you could see in the early 2000s, late 2009, almost 2010, every time there's been rate cuts, most of the time, not every single time, nothing's certain, nothing's guaranteed. And by the way, this is not financial advice, but we see that the likelihood of stocks are going to go down in the short term after rate cuts. So one thing we got to keep in mind, we got to temper our expectations. Just because the Fed pivots, don't be surprised if stocks go down in the short term and they don't shoot up like how we expect them to. Same thing with crypto. If you're in Bitcoin, we saw a huge run up over the last several weeks. The price has almost doubled in a short period of time. So throughout any bull run in Bitcoin, you're going to see healthy pullbacks and consolidations. Throughout the bull run in Bitcoin, the last 10 years, there's been 50%, 30% pullbacks in price in the middle of a bull run. So be aware of this. It's not going to be a straight line shooting to the top. So again, we're getting closer to understanding where we're going to cash out. If we're into stocks or crypto, we're eyeing mid next year to late next year on cashing out for maximum profit on our positions. Okay, moving forward with the Fed minutes, there's a couple more things we want to look at, and then we're going to look at Bitcoin. So if you're into Bitcoin, please stay tuned. If at any point you find value in this video, please consider subscribing. I'm really going to try to update you guys over the next 1.5, 2 years, so we can all make the most amount of money and gain some kind of financial freedom, which is what this channel is all about. Okay, moving on. So if we look at the Fed minute here, so the next thing I want to look at, what they're saying right here. Participants also noted that recent developments in the banking sector would likely result in tighter financial conditions for households and businesses and weigh on economic activity, hiring, inflation. Against this backdrop, all participants agreed that it was appropriate to raise the target rate for the federal funds 25 basis points to 4.75% to 5%. They also agreed that reducing the federal security holdings, blah, blah, blah. Okay, so what they're saying is because of tighter financial conditions, because of the banking crisis, credit is going to be tightened. This is something we want to keep an eye on, because tighter credit, not as much lending being a little bit tighter, the bank's not giving loans as easily to businesses. I'm actually seeing this personally myself in commercial real estate. I'm not a commercial expert. I'm a residential mortgage expert, but I'm seeing certain commercial lenders pulling loans at the very last minute. I don't know why. They're not giving us a good reason, but it sounds like credit is going to get tighter, which is going to help with inflation. Now, here is the big kind of hidden elephant in the room. So before last month's meeting, some participants noted that given the persistent high inflation and the strength of economic data, they would have considered a 50 basis point increase in the absence of the development of the banking sector. So what they're saying is they would have raised rates 0.5% had it not been for the banking collapses. Because the banks collapse, they said, hey, we're not going to do 0.5%, we're going to do 0.25%. So had it not been for SVB and all these banks collapsing, we likely would have got a 0.5% increase in the Fed funds rate. Moving on. Participants noted that the most significant issue appeared to have been limited to a small number of banks with poor risk management practices, and that the banking system remains sound and resilient. Now, we're all hoping that this issue with the banks is limited to a small number of banks with poor management. I really hope that's the case, because if this is a widespread thing, we're going to be in a lot deeper trouble, and hopefully the banking system is sound and resilient. Okay, so these are the highlights that I wanted to share with you with the Fed meeting. And our goal is to project forward how we're going to make the most money. Okay. Now, we saw what stocks are going to do. After the Fed pivots, expect a downturn before a big bull rally. Don't be surprised if this happens. Again, nothing's guaranteed, but that's what it's looking like. Now, on the other side, if you're into crypto and Bitcoin like myself, I am very big into Bitcoin and real estate. I do have stocks. I do have stocks in my retirement, S&P type funds, which is a smaller percentage of my net worth, but I'm big on real estate and I'm big on Bitcoin. So let's take a look at what happens if you're not familiar with Bitcoin, and some of you may be. We have the halving coming up next year around March of 2024. Those of you who don't know, completely different than the Fed and the monetary policy that we have in the United States, where we have humans controlling the flow of money. Jerome Powell and the Fed control how much money is pumped into the economy and how much money is taken out of the economy. We're using human judgment to decide monetary policy. We're betting on a couple of humans to control the money in our country, which sounds crazy, but that's the case. However, the difference with Bitcoin is it's an algorithm. There's only going to be so much Bitcoin in circulation. There will only be 21 million. And we know that every 4 years, Bitcoin goes through what's called a halving. Halving is very simple. Every day, there's, let's say, 900 Bitcoin that are mined and available to the public. That number gets cut in half. Okay, so every 4 years, the last one was in 2020. So in 2020, there was 1,800 Bitcoins. I'm just using this number as an example, but there's 1,800 Bitcoins every day. After 2020, that number got cut in half, and there's only 900 Bitcoin coming into circulation every single day. It was cut in half. After March of 2024, that number is going to get cut in half again. So instead of 900 Bitcoin coming onto the market every day, there's going to be only 450. So again, simple supply and demand economics. If you have the same amount of demand and your supply is cut in half, prices are going to go up. So what happens? Every 4 years after the Bitcoin halving, the price shoots up. So the first halving was in 2012. And as you could see here, huge run up in this first green area right here. Okay, after it pumped for about a year and a half. So that's normally how long Bitcoin pumps for before it comes back down into a bear market. It's usually 6 months before and 1 to 1.5 years after the halving where Bitcoin pumps, comes down, consolidates, bear market, crash. The next halving was July 2016. Boom, another meteoric, parabolic bull run, bear market, consolidation, halving in May of 2020. Boom, another bull run. And we've been in the bear market and consolidation. And now we're approaching the next halving where we're going to expect another major bull run. So if you're in Bitcoin, this event of the halving combined with the Fed pivoting, cutting rates next year, in my opinion, is going to be the perfect storm for a huge Bitcoin rally by middle or late 2024. So we have the halving that's going to come in. That's going to naturally boost the price because supply is going to get cut in half. In addition to that, the Fed's going to cut rates and they're going to start printing money. That's beautiful. If you own something that's deflationary or there's a limited supply, like real estate, Bitcoin, what's going to happen is once they start printing money, the value of this real estate as well, real estate's going to go up, gold's going to go up, stock's going to go up, and Bitcoin's going to go up. So I really, really hope we stick around, hold, hodl, keep your assets, keep your real estate, keep your Bitcoin, keep your stocks, weather this recession, which I feel like we've already been in a recession, but the mild recession that's coming this year, the Fed pivot, printing of money next year, along with the Bitcoin halving, there's a ton of opportunity to make money. So let's get rich together, guys. What do you say? Again, if you found value, please like and consider subscribing. Thank you so much for all your support. Every like, every comment, every view. I really appreciate all of you. And I hope you guys have a wonderful day, and I'll catch you on the next video.